Hey, so I want to check on Apple. Last time we looked at them was on July 23rd, so about 2 or 3 weeks since the last time we checked. I know they came out with Q3 earnings, so I definitely want to take a look at that. That's where we're going to start. We'll look at what we expected to see for that quarter, what we actually did get out of that quarter. We'll look at guidance. Then we'll wrap up with some news and then close with technical analysis. Yeah, again, it went from 191 to now 177. So I have to imagine wasn't the best earnings or maybe poor guidance. Um, but yeah, something went bad. And I guess the overall question is we'll also see is now a good time to buy or what is a good time to buy. So let's just jump into. So what did we expect to see? Earnings of $1.20 per share, and over here on the right, we were hoping to see about $81.2 billion in revenue. They beat. They ended up getting $1.26, beating by 7 cents, or I guess 6 cents. We expected $1.20, got 126. And then revenue, it wasn't the biggest beat, 81.8. We were expecting 81.2. So relatively flat, but, you know, came in good there. So overall, it seems like they met expectations. Here we have what we're looking forward to next quarter. So this kind of gives us a preview into guidance. This, I believe, has been updated. So we're now expecting to get 89 billion and $1.39. So that's an increase for the earnings per share and also an increase of revenue. We'll see if that kind of matches up with their guidance or how close it is. So another look here. Again, they were projecting 81.8. That's what they did. And they're projecting 90 billion. Again, this kind of gives us some insight into what we're expecting next quarter. I'm just going to go ahead and say I think it's going to come in lower than that based on what Apple said. Not to get too far ahead, but Apple did say that they're expecting a quarter like what they just went through. And so now let's actually look at it. They put up about 82 billion. And again, not to skip ahead too much, but guidance, they're saying it's going to be another quarter like this. So, maybe $1 billion extra. But that is quite a lot. And yet, guidance or what the analysts are hoping for is 90 billion on this site and 89 billion on Yahoo. So they're going to lose, it looks like. Also for the 9 months, for the net sales, 293. If we look at what they're projected to do for this year, again, I think that's where the 90. They reported Q3. We're going into Q4. This is the difference. That's what they're hoping to see. But Apple's most likely going to put in something like this. At least that's what they're telling us right now, is their fourth quarter is going to be like an 82. So they're going to come up short for the annual and the in the quarter. In terms of earning per share, I think that's like the almighty decider. 607. I mean, we have 1, 2, 3, 4. They should actually be okay for the earnings per share. But yeah, the revenue looks like it's going to be a miss for the year. So here we are with the income statement. We already kind of touched on the revenue aspect. Looking at gross margins, it's actually gone up this month or this quarter compared to last year. So that's very good. Their gross margins are less than 50%, but in that ballpark. In terms of 9 months ended, it actually went down a little bit, but I think that's more due to just net sales went down, so they weren't able to carry that same percentage down to that next level gross margin. We can see R&D has steadily increased from a quarter to quarter basis. Doesn't look like that much, like it doesn't pop, but whenever we look at the full 9 months, you see that those little increments do kind of show up in a cumulative fashion. Operating income, yeah, that went down. Again, I think it just kind of slowly trickled down in terms of less sales and also things like R&D increasing slightly. So that's no surprise, but it is going down. Provision for income tax, that seems very good. I just pointed out because other companies have in the past. And when I say that, I mean Microsoft mentioned it, Meta's mentioned it, and so I'm just pointing it out here. Seems like it's a very good rate. Earnings per share, that $1.26, we showed that earlier. Moving on to balance sheet, lots of cash. We have $28 billion in cash. A lot of accounts payable, especially compared to the last check-in, September 24th, so about 9 months ago. Accounts payable, not too worried about that. That's just kind of a timing thing. But overall, the current ratio is actually like a 1-to-1. So not the best ratio there, but again, tons of cash. Accounts payable should kind of cycle through. Other current liabilities, I imagine, will do the same. That's pretty much it. The only other kind of big change was other non-current assets. That's gone up about $10 billion here. Also inventories, just seeing that also ticked up a little bit. So we'll continue to watch this, but it seems like that's kind of normal for them to have about a 1-to-1. Even like a poor ratio, that's kind of standard for Apple. Not a big fan of that, but that seems to be what Apple does, and they're a pretty good company. Here we have statement of cash flow, so handful of things that just stuck out. And again, this is 9-month period versus this 9-month period in 22 versus 23. 23 is on the left side here. So we saw an increase of vendor non-trade receivables, less on accounts payable, or I guess they spent more. They spent more, but they received on the non-trade receivables. Overall operating activities, they increased about $89 billion, so great job there. Purchases of marketable securities, didn't pay for as much on that. Proceeds, they didn't sell as much, so nothing came in. Overall, big turnaround, but that really meant that they weren't purchasing as much securities. I don't see that they broke it out. Okay, so that's different. That's different than just repurchasing their own common stock. They slowed down their purchases of other securities, and we'll actually mention one in the news section. Issuance of debt. They received some debt. They also paid some. Nothing too alarming, just standard business. And as we're going through this, if you have questions, so that actually just that wraps up the financial statements. We'll look at the guidance here. But as we're going through this, if you have any questions, by all means, feel free to leave a comment, or if you want, if you can add any more insight to anything, feel free to add that in the comments. But here we have the guidance. So as I mentioned earlier, the CFO here saying the company expects the September quarter year-over-year performance to be similar to June. So right off the bat, maybe I'm misreading this, because if we go back to the beginning, the year-over-year was negative, so that can't be right. Yeah, he's saying it's going to be similar. Like my one train of thought was he could mean that if it grew, say, 2% year over year, that we would see a similar quarter of 2% growth. I initially took it as, hey, we did about 82 billion this quarter. We're probably going to do about the same. Seeing the year over year revenue where it actually went down, either way, that's probably what they're going to do, which means losses in revenues in terms of the analysts what they expected. The one surprise from this, I couldn't find the graphic, but apparently there was a segment breakdown that showed the different regions, and Apple apparently saw surprises in China and set new record highs in their India sales. So the China market grew 8%. That's kind of been a thorn in this company, is that they've just mentioned how China's not um, coming back online as quickly as they thought in terms of sales. But here we're seeing an 8% growth, and if that adds up, that could, make a dent into the revenue, and maybe they'll beat this final quarter. But right now they're expecting it to be the same, so I'm surprised the analysts are going so high. Um, but yeah, that was like the silver lining here in the revenue. The China and India sales both went up. Those are big markets, so it makes sense. Otherwise, here, let me see. This will wrap up the news before pivoting to technicals. But so Apple, they have this Apple Card. It has a high yield savings, and apparently it's hit $10 billion worth of deposits already. I forget what the interest rate is, but for like their savings account, it's like 4% interest rate. So that's very good. Almost makes me want to have an Apple Card for that one reason. But yeah, to have $10 billion, that's I'm not sure how much of a revenue stream it would be, but potentially, I guess just the upcharge of using a credit card, they would profit from that. And to see that type of exposure, 10 billion, likely to grow, that's promising to see. I'd like to see how it's broken out on their uh, income statement. Maybe we'll see that at year end, but that would be something I'd be interested in seeing. And then to wrap up, there's this new company called uh, SoftBank's ARM. The company's ARM, but it's owned by SoftBank, I guess. Um, Apple said that they want to invest in SoftBank's ARM at IPO, which is expected in September. I just bring it up because that's probably going to be a company we add to this list. I like to. I've heard of this one. I want to just see what they do. So also because there's a connection here with Apple, just thought I'd bring that up. But that covers the news. Let's just pivot over to the technical. So we can see big drop here. Uh, Broke the uptrend that we had in purple. We did have a note left for ourselves saying short-term uptrend since January by the dips has reached new all-time highs. Uh, and it has. Previously, it was like 180, reached all-time highs. It has pulled way back below that. So the short-term uptrend since January, that is, I mean, the pullback was so severe. I'm pretty comfortable in saying it's over. I'm just going to keep the note in for like 1 to 2 more weeks to see if that's truly the case. Because, again, just because something dropped that rapidly, it could easily catch up in 1 week. That's possible. It looks very doubtful. But for now, we'll keep it. It looks like, again, it's going to be heading down for a little while. Um, so I guess, yeah, I'll just keep it in. So right now, it is in a dip. So chances are I am going to pick up something of this just because this is a big dip. Um, the overall decrease was 195 to about 177, $20 change. We've seen this in the past. The percentage isn't too great, but if we look in the past, going back to 2018, here it is at 55, pulled back to about 35, $20 gap there. Here we have like 78 all the way down to 55, another $20 gap. I mean, this is just another $20 gap. Um, I suppose the good news we could say is we didn't buy it up here, but potentially we're going to buy it down here. Not sure how much longer it would pull back. Our next like green support line is at like 146, and that doesn't have much weight behind it. I believe it was initially triggered because in the early days, back in February when it was starting this uptrend, it found some support here. A couple weeks where it wanted to pull back but kept going upwards. So 146 there. If we look back a little bit of resistance. Again, here's a couple weeks where it got above, hovered around that point. Not too much there though. And again, it's one of those like tween type numbers where it kind of acted as resistance and support. Below that, going down to like 128, those were like the all-time lows since recovering from that episode that we had in 2020 with the coronavirus. It just kept building up, and then once it reached what appeared to be a peak, that's where it stopped. So that would be like the ultimate buy case. I don't think it'll pull back to that degree. Again, we have it looks like a buy point roughly at 172. It's really faint, but we have a red line and a green line right there. That green line, the reason that's drawn in is because that's like new all-time highs. And we kind of were correct on this as it was continuing that uptrend. Once it hit 172 roughly, kind of caught some support. So maybe that's probably the secondary reason why it was drawn in. But ever since then, it just took off. We've seen that many times with stocks hitting new all-time highs. This one's just taking a break. So I guess let's just start updating it. So again, it went from 191 back here roughly. 191. Since then, it inched a little bit higher to 195, and then once earnings came out, it pulled back really hard. So right now at 177. Buy points, yeah, we had, what do we have? 192. Oh, okay. So we have 146, explained that before. We have 172, which to us, that was the buy point back before. I wanted to see it pull back, surprisingly, and that was our point of interest. That's still probably going to be our point of interest. And then 192, that was going from just what the bottom of the uptrend was, fast forwarding a couple weeks into, it looks like this week, I thought we would circle back, and here we are. So we can, I guess I'll keep it in for now, but it's probably going to get removed because once that short-term uptrend is broken, once that note's removed, I'm going to remove that point too, see if we can get a little better idea of what's happening. And I guess I should also mention that even though it's broken our channel, it's still technically in an uptrend. I don't want to play around with that purple line. I want to keep that in, but like we could easily just draw, I mean, now this is the uptrend, right? If it were to stop here, we could just draw in another trend line where it's a little distorted, but I mean, we can still see the trend is still upward. So just wanted to point that out. And we might play off of that once we see that it rebounds. But yeah, looking at 172, I think this is, I'm going to mark it green. I will definitely pick up at least a share of this. We also had, for resistance, all we had was 205, and that was really just the top of the uptrend range. And again, looking forward probably a couple weeks, because for that week, when we last looked, was 197. So fast forwarding a couple weeks would have been about 203, 204, 205. So if I were to fix that, I suppose, probably be like 195 at this point. And I am going to remove the 192 until I see it get back into the uptrend. I'm going to update the day to today's date. Earnings, we just went over that, so I'll update that date soon. Short-term uptrend since January. Uptrend is descending. Still keep the buy. Dips has reached new all-time highs. We'll just remove that because that's kind of old news now. And that pretty much wraps this one up. So yeah, just a quick recap here before we close out. We have Apple. Currently is at 177. We have buy points noted at 146 and 172. It's right there. It's broken the the previous uptrend. So that's definitely a dip moment. So I would be comfortable reaching for this one. Not too much, just in case it keeps pulling back, but maybe a share here, whatever you're kind of comfortable with, I would say. But buy points 146 and 172. Resistance 195. That would just be the top of the uptrend range. Right now, if we fast forward, it probably speeds up a little bit. But 195, or actually 195 is all-time highs. So that's all-time highs. Clearly it got rejected there. Couldn't be purchased anymore. Most likely due to its Q3 earnings. So 195 is clearly, it's getting rejected there. We changed the earnings. And again, that short-term uptrend since January, still in effect, truly. It's just, as we added, uptrend is descending. And we're still comfortable buying the dips. If this one breaks 172, the closer it can get to 146, I think it'll slow down at 146. If not, potentially all the way down to 128. It really depends on how far it pulls back over the next probably couple weeks. We'll see when buyers want to step in. We'll be paying attention to these bars down here at the bottom. But yeah, that pretty much wraps this up. So again, if you have any questions, by all means, let me know in the comments, or if you want to add any insight, that'd be very helpful. But otherwise, please like, subscribe, and I'll see you on the next one. Bye.